Good evening, ladies and gentlemen. Welcome to the Q1 FY22 earnings conference call of Salasar Techno Engineering Limited. As a reminder, all participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Sumit Shah from Practo Capital for the opening remarks. Thank you, and over to you,
sir. Thank you, Bilal. Good evening, everyone. This is Sumit Shah from Practo Capital. We represent investor relations for Salasar Techno Engineering Limited. On behalf of Salasar Techno Engineering Limited, I welcome you all to our Q1 FY22 earning conference call. I have with me from the management Mr. Shashank Agarwal, Joint Managing Director, and Mr. Pramod Kala, Chief Financial Officer. We have a brief opening remark from the management, followed by a Q&A session. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that could cause our actual results or projections to differ. The company will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements. I would now like to hand over the call to Mr. Shashank Agarwal for his opening remarks. Over to you, sir.
Thank you, Sumit. Good evening, everyone, and welcome to our Q1 FY22 earnings conference call. I hope everyone is keeping safe and healthy. Let me start by taking you through some of the highlights for the quarter. I'm happy with the performance our team has delivered during these challenging times. On a consolidated basis, we have registered a revenue of rupees 132.8 crores for the Q1 FY22 compared to rupees 63.2 crores in the corresponding period of Q1 FY21. There is a 110% year-on-year growth for the quarter. To speak about the segmental revenue contribution in Q1 FY22, revenue from manufacturing of steel structures stood at 67%, EPC for power transmission at 18%, EPC from railways, electrification at 15%. Our performance for the quarter was impacted as we saw the emergence of second wave of COVID-19, which impacted our execution of certain projects, and it also impacted our telecom tower dispatches. We faced labor shortages in our manufacturing units as some of our employees got affected and there was restrictions on the movements as well. We also faced acute shortage of oxygen in our plants, which is essential for the fabrication of steel structures. However, we were able to manage the situation to the best of our ability. As a good corporate, ensuring safety of all our employees, we had conducted a COVID-19 vaccination drive, ensuring that all our employees were vaccinated by the first dose. Second dose, of course, is on the annual. As soon as the timelines come, the second dose will also be vaccinated. Our EBITDA for the quarter stood at rupees 14.7 crores compared to rupees 4.8 crores in Q1 FY21. EBITDA margins for the quarter stood at 11.1%, which show a steady increase in our efforts to continuously strive towards improving our margins. The reported PAT for the quarter stood at rupees 7.3 crores with a margin of 5.5%. In terms of order inflow, we have secured various orders during the quarter, few of which I would like to highlight. We secured orders from Rajasthan Rajya Vidyut Prasaran Nigam Limited for construction of transmission lines, along with the supply of all equipment and material for 220 kVA and 132 kV lines, worth rupees 27.45 and rupees 20.25 crores respectively. We received an order from Power Grid Corporation worth rupees 238 crores for construction of 201 km transmission lines along with 4 substations in Arunachal Pradesh. we received a very prestigious order for construction of telecom towers of various sites for a value of rupees 55 crores from IKI Limited for the ESCON 4 project. This project is of defense and is of a very high national importance. With this, our total order book stands at rupees 960 crores, including outstanding order book, L1 EPC orders, manufacturing orders, and outstanding under heavy structure unit and orders under Salasar Techno. We are very confident about the opportunities in our focus sectors. We continue to see a lot of opportunities coming in our way as the telecom operators are working towards improving their connectivity. Also, in the near future, once the rollout of 5G begins, we expect exponential rise in the demand for telecom towers. Increasingly, we see good demand from the power and railway EPC segments and also our new heavy structure division. We remain committed and are working towards our set targets of achieving higher profitable growth and becoming one of the leading players in our industry. I would like to thank all our shareholders for their continued support and faith in us. This is all from my side. I would now ask moderator to open the floor for question and answer session.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may please press star and 2. Participants are requested to use handset while asking a question. To ask a question, you may please press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1. We have a first question from the line of Amit Mehta, an individual investor. Please go ahead.
Good evening, sir. Thank you for the opportunity. Basically, had a couple of questions, sir, on the telecom front. The first one is, once the 5G rollout starts, what is the demand that we foresee? And is the industry ready to undertake the kind of capex that will be required?
See, the demand for 5G is going to be exponential, as I said. And I've said earlier also, the demand for telecom towers or the connected sites in next 10 years is going to be more than what we did in last 25 years as a telecom industry in total. So no matter what, all the operators will have to do the capex. And whether they are ready or not, yes, they are ready. You can see there will be increase in price points for the operators, and they will have some focus on increasing their ARPUs so that they can have money to roll out sites. And 5G is something which is written on the wall, and nobody will be able to avoid it. They have to go with the 5G, no matter what, from where. Ever they have to bring the money back, borrow, still they'll have to put money in the capex to roll out 5G. So in 5G, there'll be, two kinds of sites. There'll be a lot of sites wherein the existing towers would be used. Those would be called non-standalone sites, wherein there'll be antennas for 4G as well as 5G. Whereas there'll be a lot of sites, new sites, which will come up as standalone sites, which will be used typically for expanding 5G. And there'll be many towers near to each other to give you a seamless connectivity in 5G. That's the whole idea about 5G.
Understood, sir. So a small follow-up to that is there any development currently happening in terms of new deployment of towers or any kind of orders that we've seen, maybe which you can execute in FY22 or something, 23, 22?
Oh, plenty. See, the focus right now is to increase the 4G connectivity, especially in the rural areas. See, we have 4G today in the urban areas, but rural areas still we are running on 2G. And the companies right now are focusing on increasing their reach in the rural areas, and that's more so on the 4G connectivity. And there's a lot of expansion which is happening in the northeast area in Bihar, Jharkhand, Chhattisgarh, wherein all the new sites are being put up as 4G sites. Even today, even in the urban areas, the connectivity, I mean, it was good till some time back, but for the last, I would say, about a month or so, suddenly the load has increased on the networks, and companies are under pressure to increase the connectivity. They were putting many towers, many connecting points in the urban areas as well.
Right. So one last question from my end is the EBITDA margins which we saw this quarter, they've grown significantly. So is it sustainable? And going forward, what is the benchmark figure or margins that we're looking at? Any benchmarks?
See, this particular quarter, in fact, we had some exports which were at a better rate, and which actually contributed to better EBITDA margin. Plus, there were some orders from the telecom which we took at a good price, and we had some older stock in hand, which actually gave us better margins in terms of EBITDA. That is one of the main reasons for increasing the EBITDA margins this quarter. Well, I mean, typically our EBITDA margins have been in the range of 10.5 to 11%, and I don't see them going too much up or too much down. It must be in the similar kind of range.
Got it. So thank you so much, sir. Thank you so much.
You're welcome. Thank you.
Thank you very much. A reminder to the participant to ask a question. You may please press star and 1. The next question is from the line of Mansi Shah, an individual investor. Please go ahead.
Good evening, sir. Thank you for the opportunity. My first question is, what was the capacity utilization for this quarter, and is the company planning on expanding its capacity?
Okay, so this quarter we had a lockdown of almost 40-45 days, and then the plants stopped, working in around 15th of April, around 20th of April, and they were shut down till about end of May. So the capacity utilization has been very less. I would say almost 50% of what we would have been able to achieve if it was a normal, period. But even then, we did almost 11,000 tons. Almost 11,000 tons of production and almost more than 10,000 tons of dispatches. Well, as far as the expansion is concerned, we are planning to put up a new galvanizing plant. That's on the anvil. The final decisions have to be taken. But that will happen towards the end of the year, mostly.
Okay. The next question is, like, the current order book of the company is 960 crores. So, will it be executed in the following quarters of the current fiscal year, or it will be shared in the next fiscal year?
See, there are certain orders which will be completed within this year. There will be part of it which will be completed next year, because see, there are certain projects of EPC which have a timeline of almost 24 to 36 months. So that will, some of the projects will even spill over to the next year after that. So partly in this year, partly next year, and partly after that.
Okay. And also the revenue share from the railway electrification segment has increased by significant %. So is the company planning on focusing more on this segment in upcoming quarters?
Yes, we are focused on railway. The reason for increasing the railway revenue this quarter was that some of the projects were handed over, and we were able to close the billing. The work was going on, till about last quarter, and then finalized, handed over. So a lot of billing was done this quarter as well. So, but yes, our focus is on railways because it's a very growing sector, and we definitely are looking forward to have a good penetration in the railway electrification market.
Okay. So can you tell us that what are the pending orders in the railway segment and what is the bid book currently?
300 crores is a bid book in where we have bigger tenders for railways, and the pending order book for railway is almost like about 100 crores odd.
Okay. And like presently 46,000 odd kilometers of the track have already been electrified and still 20,000 kilometers is left to do. So what is the size which we are looking at out of the pending pie, and how do we plan to get these orders?
See, as far as the order size or the order grabbing is concerned, we are bidding for the projects where we think we'll be able to complete at a good margin. That's number one. We are not running around and grabbing the jobs. Jobs are available, but sometimes the jobs are not available at a margin that we need. So we don't really quote for those jobs. We quote for jobs wherein we are able to make a margin. Right? That's number one. As far as 20,000 kilometers leftover is concerned, it is going to take at least 5 to 7 years for the electrification of that. The government's target is, I think, 2-3 years, but I really doubt if that is possible to do in 3 years. And even if we are able to get a 5% share of that whole available market, we'll be happy.
Okay. And what's the EBITDA margin that we are enjoying in the railway segment?
Typically, see, that varies from project to project. We have projects where we have had EBITDA margins of 14% also, and we have had projects wherein we had EBITDA margins of 9%, 10% also. So that varies from project to project. But overall, yes, the EBITDA margins, end of the day, when it comes, that remains between 10.5% to 11%.
Okay. And the last question from my end, if you can throw some light on the company solar segment.
Well, solar is picking up once again, but not to the extent that we would like. And the margins, for the companies who are working in the solar sector are squeezed at the moment. And that is the reason that even there, when we supply to them, they also try to squeeze the margin for us. So we are not very much focused on the solar sector as such. We take orders wherein the customer is good, the payments are secure, and that the margin is available, at least to a certain extent. There are a lot of work available in the market, but it's not that we just go and get everything, So that is what. I mean, solar business is not even 5% today, not even 3%, I would say. Yeah.
Okay. Thank you.
Thank you.
Thank you. Anyone who wishes to ask any question may please press star and 1. The next question is from the line of Muskan Chaudhary, an individual investor. Please go ahead.
Yeah, hello. Can you hear me?
Yeah, we can hear you.
Sir, I would like for you to throw some light on the new manufacturing plant that became operational in this current quarter in April for the heavy steel sectors. If you could just let us know what is the expected maximum revenue from that segment, and what kind of margins can we look forward to?
So this plant was ready for manufacturing in April. But when the lockdown happened, we could start the production only in the month of June. There was a total lockout. But even then, we were able to do a billing of almost 200 tons end of June of about, I think, 1.6 or 7 crores, if I remember correctly. And this quarter, we plan to do almost, I would say, around close to 1,500 tons minimum, or maybe more, in this quarter. And the target is to achieve 1,000 tons a month average, billing from that. And typically, if we are able to do 1,000 tons a month, that should give us a revenue of almost 90 to 95 crores per month. 9 to 10 crores per month, and about 100 crores a year minimum. That is the kind of revenue. As far as EBITDA margins, so EBITDA margins typically in the steel sector in our line of business are limited to 11 to 12%. So we are expecting a little better margin going forward in our own business because there is a demand, huge demand. But you can see the margins should be in the range of 11 to 12% in that business.
Right. Got it, sir. Got it. And in terms of, the process, would it be based on more of a bidding kind of structures, or would they be, open table offers? How would you go about taking on orders for this?
Mostly the customers are in the private sector, so this is all across the table negotiations. And we have a steel pricing on one side, the manufacturing cost on the one side, and there's a customer on the other side. And this is how you negotiate and close.
Okay. And sir, what would be the average time frame for the completion of these kind of projects?
So typically these are supply orders, and supplies normally start within 30 days from the date of receipt of order, and depending on the order size, it might take anywhere from 15 days to 2 months to supply one single order. After that.
Okay. And sir, I mean, in this segment, once the current plant capacity is utilized, are there, I mean, this may be premature, but are there already plans to further expand capacity?
Yes, we have something in mind. As soon as we are able to achieve our full capacity of 1,000 tons, we will definitely be looking to expand further capacity.
Got it. Okay, I think that's very helpful, sir. One last thing I would like to know is what would be the outstanding debtor amount as of this quarter, including the retention amounts?
210 crores.
Okay. Got it. Thank you so much.
All right. Thank you. You're welcome.
Thank you very much. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Amit Mehta, an individual investor. Please go ahead.
Yeah, thank you so much for taking my question again. So, sir, I had some follow-ups. Basically, as you mentioned that right now we're more focused on 3G and 4G and increasing the connectivity. So, my question was, what is the current capacity of the telecom towers, and going forward, what kind of capacity would we require for a seamless experience?
So there are about 600,000 towers in India at the moment. Okay. Yeah. And this 600,000 towers have been put up during last 25 years, from 1995 to 2020. 2020 is when the telecom industry in India completed Silver Jubilee 25 years, right? Okay. And these 600,000 towers have about 800,000 points of connectivity, give and take, assuming that there is a average tenancy of about 1.35 per tower course. So to have a seamless experience on 5G all across the country in India, you need at least 1 million more towers and at least 1.5 million points of connectivity in next 10 years. That's my take on that.
Okay, understood. And sir, you also talked about the debt levels, in the previous question. So, what would be the cost of capital that, or the interest rates that we are charged on these?
We have sub 8% financing from the bank for CC limits in the range of about 7.75%. Okay. And we rather get a subvention also. So average cost is not more than 7.5%. Average.
Okay, great. And sir, I just saw your presentation and it talks about different orders. So if you could help us understand the breakup of orders under various segments and what is the average, the general time frame for completion of those orders?
So the orders under EPC which are under execution are about 560 crores. And in this, there will be orders which will be closed. There will be projects which will be closed within this financial year. There will be some projects which will be closed next year, and there will be some partly which will be closed year after that.
Okay.
And after that, we are L1, wherein we are awaiting LOIs for orders worth 88 crores for EPC business. ROB business, that's the heavy structural division business, we have order book of around 70 crores, plus minus. And we have metro railway work going on in our JV, our Salasar Techno, so about 250 crores, out of which almost 240 crores is balanced to be executed. Then we have telecom towers order book of almost 25 crores every month, which is an open order book. Then we have a pending order book of export of telecom towers of about 8 to 9 crores.
Okay, sir. Understood. Very helpful, sir. So moving on to a couple of questions on transmission business that we have. So what are the pending orders in this segment and the bid book? What does it look like ending the first quarter of FY22?
FY22 first, we have pending orders 490 crores out of 960. 560 crores. Yeah. 560 crores is under EPC, which includes railways as well as transmission. Out of which transmission would be close to about 400 crores, maybe about 460 crores, because about 100 crores is what is pending in the railway EPC. And this, as I said, will be completed partly this year, next year, and year after that.
Understood. And so what is the time frame, to get an idea from bidding to project and awarded? Any kind of guidance if you can provide?
So it varies again from, government entity to entity. Sometimes you are awarded L1 within 1 week you get an LOI. Sometimes it takes a couple of months to get LOI. Sometimes it takes even 6 months.
Understood.
Varies.
Last couple of questions, sir. Basically, I also wanted to understand if there is any progress made in the smart cities project, in that business.
Smart city projects are going on, and the demand from smart cities is there, but not to the extent which was expected a few years back. There is a lot of noise around the smart cities rather than the work. We are supplying smart towers, smart poles to various smart city projects. But that is not, I would say, a substantial part of the revenue. Because these are very small typical orders, wherein, not run-of-the-mill kind of a thing. Very special.
Yeah. So last question, sir, from my end. Very premature to ask also, but if there is any kind of a short to 3 to 5 year vision for the company, wherein what kind of revenues or any kind of numbers that you can throw, numbers or margin that you can throw for us, sir.
See, we plan to grow at least 15% year-on-year basis. That's the minimum target we have internally. So you can work out the numbers,
Understood. Thank you so much. That's super helpful. Thank you so much, and wishing you all the best.
Thank you.
Thank you very much. A reminder to the participant, to ask a question, you may please press star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Agarwal from Salasar Techno Engineering Limited for closing comments. Over to you, sir.
Thank you. So thank you everyone for your participation in our Q1 FY22 earnings conference call. In case of any further queries, you may get in touch with our Pareto Capital advisors, or feel free to get in touch with us. We look forward to your interacting with you in the next quarter. Thanks once again. And keep safe, keep well. Thank you.
Thank you very much. On behalf of Salasar Techno Engineering Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.